Well, the time is 11:30 a.m. and so welcome to the annual general meeting of Mobeus Income and Growth for VCT. The company secretary has advised that a quorum of members is present and I declare the meeting now open. For those of you who are not familiar with the board, my name is Jonathan Cartwright. I was appointed as a director in September 2020 and took over as chairman of your company on the 1st of October 2020 following Christopher Moore's retirement. I'm joined by my fellow directors. Firstly, may I introduce Helen Sinclair?
Hello, everybody. I am also the chairman of the investment committee, which considers all investment proposals submitted to the company. Thank you.
Thank you, Helen. May I introduce Graham Patterson?
Good morning, everyone. I am also chairman of the company's audit, nomination and remuneration committees. Thank you.
Thank you, Graham. And then Chris Berg.
Good morning, everyone. I joined the board in November of 2019, and I'm a member of the audit committee. Thank you, Jonathan.
Thank you, Chris. Also joining us are the team from our investment advisor, Mobeus Equity Partners LLP, Clive Austin and Trevor Hope. And you will be able to see them shortly for a presentation on your screens. May I also remind you that Mobeus is our company secretary. Again, this year, there's a different format to our meeting as a physical meeting still cannot be held so as to comply with government restrictions. We hope this new visual format is both helpful and inclusive. Shareholders are able to register a question at any time during the meeting by typing your query in the Ask a Question box under the live event Q&A icon. It would be very helpful if you could state your name and also declare if you are a shareholder when submitting a question. We will try to answer as many questions live as possible following the presentation. However, if that is not possible, we will provide you with a written response and post the answer on the company's website. As advised to you in the annual report, and as a result of the current circumstances, the formal business of the meeting will be conducted as a closed meeting and voting taken by the quorum of members present at the meeting venue, which is Mobeus's offices, by way of a poll of all the valid proxy votes lodged. Now showing on your screen are the resolutions proposed as set out in the notice of meeting on pages 80 to 82 of the annual report. I'm pleased to confirm that all of the resolutions have been passed and that the formal business of the meeting has therefore been concluded. The Secretary has advised that valid forms of proxy were received from 404 members who hold 6,578,036 shares, representing 7.83% of the company. My thanks to the many shareholders who took the time to lodge their votes. An announcement of the proxy votes received will be made to the London Stock Exchange, and the schedule of the proxy votes will also be published on the company's website. The results of the proxy votes received are now displayed on the screen. The resolutions numbered 1 to 8 are all ordinary resolutions that require 50% of the votes cast to be passed. The results of 3 resolutions will be shown on the screen, so they are legible for you. As shown on this slide, all the votes cast for resolutions 1 to 3 were over 83%. For shareholders that have joined by the conference call facility and cannot see the screen, may I remind you that these results will be published on the company's website shortly after the meeting. Showing now on the screen are resolutions 4 to 6, and all the votes cast for the resolutions were over 82% in favour, as hopefully you can see. This slide showing the voting results for resolutions 7 and 8, which are ordinary resolutions, and also for resolution 9, which is a special resolution requiring 75% of the votes cast to be in favour. All the resolutions received between 80 and 95% in favour of their respective resolutions. The final slide shows that resolution 10, also a special resolution requiring 75% of the votes cast in favour, was passed by just over 97%. The votes at the discretion of the chairman were all voted for that resolution. Before I turn to Trevor and Clive to give their presentation, I'll just perhaps make one or two remarks. And notwithstanding the unprecedented conditions with which we've all had to cope during the COVID-19 pandemic, the company was an active investor during the year, and portfolio investee businesses generally showed great innovation and resourcefulness, as in many cases they were obliged to adapt their business models to respond to the conditions created by the pandemic. The company's NAV total net asset value total return per share for the year was 22.2%, compared with 10.7% in 2019, reflecting robust underlying performance, and after taking account of dividends totaling 10 pence per share paid during the year, comprising a 4% dividend in respect of 2019 and a 6 pence dividend in respect of 2020. As I mentioned earlier, you can register to ask a question at any time by typing your query in the Ask a Question box. Please do include your name and if you're a shareholder when setting a question. Following the presentation, we shall have the opportunity to answer those questions. May I now hand over to Trevor and Clive of Mobeus to give their presentation on our investment portfolio. Thank you.
Thank you, Chair. Good morning, everyone, and welcome. My name is Trevor Hope, and I lead the Mobeus VCT's new investment team, and I'll be joined in this roughly 15-minute presentation by my fellow partner, Clive Austin, who heads our portfolio team. During the presentation, we plan to provide you with an update on your fund's performance, including, of course, the impacts of the pandemic, and to provide a little colour to the investment and exits, which took place during the fund's financial year at December 2020, and thereafter the most recent quarter to March. Firstly, an overview of your fund. At the end of March, the Mobeus Income and Growth 4 VCT has a net asset value of just under £82 million, with £52 million in portfolio company value and £30 million in cash and near cash instruments. The top 10 investments displayed here represent circa 44% of the fund's value, the largest, Virgin Wines, being 28% of the total invested portfolio value and 12% of the whole fund. Following our balanced portfolio strategy, the 33 companies represent a number of different sectors, including B2B software, business services, and edtech. The largest value by sector is currently in e-commerce, which has of course generally benefited from the shift towards online spending, further accelerated by the pandemic. However, even in the e-commerce portfolio, there is an element of diversification in terms of staples such as food and wine, but also spread out across other segments such as camera equipment, home hardware, sporting equipment, etc. In terms of performance, I'm happy to report that fund performance has been strong. Clive will provide further insight into the rollercoaster that was the initial stages of the pandemic, but overall, the performance of the year was very pleasing. 10 pence of tax-free dividends were paid in the financial year, an increase in NAV of 16.6 pence, and a NAV return of just over 22%. We published our interim management statement for the fund's first quarter of its current financial year, and as you can see, the positive performance has been maintained in the quarter to March, with a further NAV return of 19% over the quarter period. We completed some really exciting investments during and post the year end. Anderson, a designer, manufacturer, retailer, and installer of premium electric vehicle chargers. Vivacity Labs provides camera systems using artificial intelligence to gather highly accurate data about road system usage, with that intelligence then being used to drive along long-term transport planning and intelligent traffic lights. A B2B software investment was Connect Childcare, the UK's leading software provider to nurseries. Caledonian Leisure is a UK staycation holiday business which has bookings of well over £1 million since it opened for trading a few weeks ago as the population and the economy prepares for coming out of lockdown. Follow-on investments included funding to support further growth in companies which were already doing well before the pandemic, and then their business models became increasingly important during periods of lockdown. MyTutor, which provides online tutoring, and ParsleyBots, which is a direct-to-consumer business delivering ambient food predominantly to the senior segment of the population. For some further insight into the impacts of the pandemic on the fund and the portfolio, I'm going to hand over to Clive.
Thanks, Trevor. Hello everyone, I'm Clive Austin and I lead the Mobeus growth business alongside Trevor with a specific focus on portfolio. And what I thought I'd do is take you through the story of the last year, quarter by quarter, from a portfolio perspective. So we'd had a strong final quarter of calendar 19, and then the world changed fundamentally as we hit UK lockdown. So if you cast your minds back, this was the height of uncertainty, where no one knew about the science or the economic impact of COVID-19. Quoted markets were plummeting, and there were fears of widespread corporate shutdowns, with earnings forecasts being slashed and provisions being applied to valuation. Many companies experienced a significant reduction in short-term revenue, particularly in the travel, hospitality and retail sectors. We also changed our processes to repurpose Mobeus resource to work from home and to prioritise the portfolio. And as you can see, the result was an unprecedented fall in NAV total return at the end of March, which was broadly similar to others across the industry. But it was important to do this, not least because we're about to allot new shares. So fast forward now to June, and the world was a very different place in many ways. Markets had remained volatile, but quoted benchmarks had recovered much of their lost ground. And intervention by governments all over the world proved effective, and lockdown had far less impact than we first thought, and life went on. To give you a sense of this intervention, at its peak, around 48% of the portfolio workforce was on furlough, and there were only 2 forced shutdowns. And whilst most investee companies experienced the initial dip in trading, in many cases this was quickly recovered, and a significant number have gone on to deliver record performance. We were therefore able to release many of the contingency provisions that we applied in March, and by 30th of June the value declines since September had mostly been recovered. So looking at September and beyond, and the good news is that the positive momentum has been maintained. We've seen no material impact from lockdowns 2 and 3, and the UK economy certainly faces some significant challenges, but we're seeing continued strong performance across the portfolio, with around 85% of our companies up year on year relative to 2019. So this has driven a significant increase to the end of December, and as Trevor mentioned earlier, an even stronger performance in the most recent March quarter. And we're certainly not complacent, but I think the portfolio is robust and as well prepared as it can be as we move through into 2021. There are some winners and losers emerging from all this, and I don't think this slide will come as much of a surprise to you, as it reflects the themes that have been widely commented on in the media. So large organisations with inflexible business models have struggled, but the exposure to these very challenging sectors within the Mobeus portfolio is very low. In contrast, Mobeus has invested in a wide range of agile young SME businesses that stand to benefit from the structural shift to online models. So for instance, IPV, which is a great example of this agility, where management launched an online version of their video management software in response to lockdown, and it's gone extremely well. So looking at how this translates to unrealised value movements over the year, you can see that the majority of increases are direct consumer or digitally enabled businesses. So for instance, we've got online wine retailer Virgin Wines, which is a super business and has doubled its profitability over the last year, and which we floated on AIM at the beginning of March, providing a significant further uplift to that shown here at the year end. And there are lots more success stories such as MPB and Parsley Box. But there have also been some businesses who found it hard, such as Tapas Revolution, which is a restaurant chain, which was closed for much of the year, and vehicle graphics business CGI, which relies on automotive and airline clients for much of its business. But happily, both of those are now on the up. Overall, though, this is a very pleasing uplift, and I'd like to leave you with a message that the portfolio is well invested in a broad range of great companies. They operate in attractive sectors, and I think they're well placed for the future. We've also had a very busy year for realisations, which have generated healthy gains over the 12 months to end December. And whilst I hope you'll agree this has been a very productive and profitable period for the VCT, I'd stress it's not an isolated occurrence and that there's continued momentum in this area. So to give you a bit more colour on the exit activity during the year. This slide shows that we've delivered some substantial profits to shareholders over the year, despite COVID, and some of our strongest returns were actually delivered in the teeth of the pandemic. 6 exits is a busy period by any standard, and I'm particularly pleased that it includes exits from the growth portfolio together with some of our more mature assets. It also moves the dial for the VCTs in that we've realised over 21 million in cash proceeds, with more than 14 million of cash profits across the 6 realisations. But this performance isn't one-off, and over the last 5 years we've generated an average uplift over 6-month trailing valuation of nearly 73% on exit, and looking forward I see no reason why that should change. Indeed, 2021 has already been very productive, with 4 more landmark portfolio deals. The sale of Omega Diagnostics, 110 million IPO of Virgin Wines, the 80 million IPO of Parsley Box, and a 50 million fundraise by MPB. These realised and unrealised value movements average over 5.7 times multiple of cost and are at the heart of what's driven portfolio returns over the last quarter. So that's me done for now. So I'll hand you back to Trevor, who will pull things together before we break for questions.
Thank you, Clive. In terms of the impact of portfolio performance and those impressive exits, here is some further detail of performance delivered to shareholders. This chart provides details of the net asset value total return over the last 5 years in the purple shaded blocks, a combination of net asset value and cumulative dividends paid. As you can see, a very pleasing performance with the average dividend during the 5-year period of 10.8 pence per annum, significantly above the stated dividend target for the fund. The final purple block on the right relates to the quarter completed as of March 2021, which shows a strong start to the fund's 2021 financial year with growth in the NAV. However, though of course we believe the portfolio is robust, and as Clive said, looking sort of positive for the future, new investment opportunities are arising. We of course remain cautious as there is a continuing level of uncertainty with the economy and the general outlook as we make our way through this pandemic. And so that's all well and good, but how does that income and growth fund VCT4 actually compare against other Mobeus VCTs, but also in the wider market? Now we know that many of our shareholders will not only have a holding in what we call MIG4, Mobeus Income and Growth for VCT, but they may also well hold investments in other VCTs. Well, in comparison, the MIG4 VCT holds up very well. Of the 42 generalist VCTs currently in the market, Mobeus Income and Growth 4, and in fact all of the Mobeus managed VCTs are high in the performance league tables in the short, medium and long term. There are always areas for improvement, but we are proud to have been able to maintain the fund's chart-topping performance over the long, medium and short term, and we will strive to continue doing so. On that positive note, I thank you for your attention, and I'm going to pass back to the chair for the Q&A session.
Well, Trevor and Clive, thank you very much indeed for your very detailed and comprehensive presentation. I believe there are in fact no questions from shareholders, and therefore on that basis, I think the business of the meeting is concluded. And I will thank very much shareholders for attending and following our progress. So thank you for joining us today, and we hope you found the format productive. I hope very much that we'll be able to meet you in person for the AGM, the annual general meeting next year. And with that, I conclude the meeting. Thank you very much and goodbye.